Okay, let's come to the third one. Third entry is purchase goods for cash, rupees 15,000. Okay, one thing I want to share with you. When we were doing the accounting equation, uh, we said goods are coming in, goods are going out. So goods are coming in, goods are going out were done, all everything was done in the goods account. But now we will do the bifurcation of the goods account also. When the goods are being purchased, when the goods are being coming in, they are purchased, we will use a purchase account. If they are sold, they would be using a sales account. If the purchased goods are returned, we will be using a purchase return account. If the sold goods are returned, we would be using a sales return account. So for every type of transaction, we would be using a different type of account. Third transaction, purchase goods for cash rupees 15,000. Now, two accounts are involved. Goods are purchased, so I will use a purchase account, and goods are being purchased by paying cash, and then cash account is involved. So purchase account is involved and cash account is involved. So purchase account is a what type of account? Real. And cash account is again a real account. Both are the real account. Now what is coming in the business? Cash is coming in or goods are coming in? Goods are coming in. So when goods are coming in, real account rule says debit what comes in. So goods are staying in the purchase account. So I should debit the purchase account. Purchase account debit, and cash is going out because I have to make the payment to cash. Purchase account debit to cash. Clear with everyone? Let's come to the next entry. Sold goods for cash rupees 6,000. Goods are being sold for 6,000. Now goods are being sold for 6,000 means again the goods account is involved and the cash account is involved. Now goods are being sold, so we will use a sales account. So we will use the sales account. Both are real accounts. Debit what comes in, credit what goes out. Goods are going out, cash is coming in. So cash account debit to sales. Clear with everyone? First four entries are clear with everyone? Okay. Let's come to the fifth entry. Purchased furniture and paid by check rupees 5,000. Purchased furniture and paid by check rupees 5,000. Now furniture is what? Furniture is your asset or is it your good? I can't see any opposite. I am really not able to understand how you call it opposite. Yes, asset, when asset is coming in, you need to debit. No, I am from a commerce background only. Commerce, now I can say commerce is in my blood. Okay, let's see the next entry. Let's see the entry. Fifth entry. Fifth entry, he purchased furniture and paid by check rupees 5,000. I can understand what a science guy thinks. I can very well understand what a science guy thinks. I don't know till now, it must have at least dealt with some 50,000 students or so. Okay, so I can very well understand, and the finance means everything, same for everyone. So let's focus on the fifth entry rather than jumping on the conclusion. Rather than jumping on the conclusion, let's focus on the fifth entry. At least go through 10-15 entries, then you will understand accounting is a very systematic science. We call it accounting as a science as well as an art. Why it is a science? It is totally rule driven. It is totally rule driven. Whatever I will debit here, the same thing would be debited in the jungles of South Africa also. And it's an art because every business is different. So for every business, we create a separate account. Separate types of accounts would be there in a cloth house. Separate type of accounts would be there in a IT industry. But it is a very systematic thing. Now we are buying the furniture. Okay, he purchased furniture and paid by check rupees 5,000. Now the things which are there in the goods account. Goods account means purchase, sale, purchase, return, sales, return, opening stock, closing stock. Those are the goods which are dealt in the ordinary course of the business. Means those are the goods which are for buying and selling, which is my main line of the business. Right? Now this furniture I have not purchased for the purpose of selling. This furniture I have purchased to keep in the business as my fixed asset. Furniture may be a table which I want to use as my counter. So this is my fixed asset, so it cannot be counted as my purchase. Purchase is what I want to sell. I want to make profit out of it. Fixed asset is something which is used in the business in that you don't make a profit out of that. So purchase furniture and paid by check rupees 5,000. So two accounts involved. Furniture account is involved and check check is involved, so bank account is involved, right? Now furniture account is a real account, bank account is a personal account. Real account says debit what comes in. Furniture is coming in the business, so I should debit it. Furniture debit And personal account debit the receiver, credit the giver. Who is the giver? Bank is the giver of the payment. Cash is going out from the bank. So furniture account debit to bank. 5,000, 5,000. Right? Is it clear with everyone? Let's come to the sixth entry. He sold goods to Arvind, rupees 4,000. Sold goods to Arvind, rupees 4,000. Now you have sold goods. Arvind party name is given. If the party name is given, it means it is a credit sale. Right? So you have sold goods to Arvind on credit. Now you have not received cash for it. In the fourth entry, you have received the cash for it. But now sales account is involved because it is the sale of the goods and the Arvind account is involved. So Arvind is a personal account, sales is the real account, right? Who is the receiver of the goods? Arvind. So Arvind debit to sales. Goods are going out, so sales would be credited. Arvind becomes your debtor. Just check the entry. Is it clear with everyone? Sixth entry. Because it is related to the goods, Megha. It is related to the goods. Goods are your assets. Okay, let's come to the seventh entry. Purchased goods from Amrit, rupees 10,000. Now goods are being purchased from Amrit, rupees 10,000. Now this is Amrit name is given. It means it is a credit purchase. No cash transaction has taken place. So Amrit account is involved and the purchase account is involved. Purchase is a real account. Amrit is a personal account. Goods are coming in. So debit what comes in. Purchase account debit, and who is the giver? Amrit. So purchase account debit to Amrit. Right, clear with everyone? Next entry, returned goods to Amrit. Now you have returned goods to Amrit, rupees 5,000. Amrit is a person from whom you have purchased the goods of 10,000. Out of the purchased goods, you have returned the goods worth rupees 5,000. So this is basically a purchase return. So purchase return account is involved and the Amrit account is involved. Purchase return is a real account and Amrit account is the personal account. Purchase return is goods are going out and who is the receiver? Amrit is the receiver. So Amrit account debit to purchase return. Next entry, received from Arvind rupees 3960 in full settlement. You have received 3960 in full settlement from Arvind. Arvind, who is Arvind? Who is Arvind? Arvind is a person to whom you made the credit sale of 4000. So from Arvind you have received 3960. Arvind was supposed to pay you 4000 but he has paid you only 3960 in full settlement. In full settlement means you have to nil the account for Arvind because he will not pay anything more. He has paid whatever is due. So you were supposed to receive 4000 but you have received only 3960. 40 is the loss to you. This must be received in cash. This is the expense for you, loss, and this is from Arvind. Cash is coming in, so I will debit cash, right? 3960 I will debit, and I am receive. Who is the giver? Arvind is the giver, so I will credit Arvind. I will credit Arvind here 4000, and 40 is the expense, that is a discount he has taken. Nominal account rule says debit all expenses and losses, so discount debit, right? This is how the entry would be framed. In any case, we have to balance the debit amount with the credit amount. Is it clear with everyone? He withdrew goods for personal use rupees 1000. The goods which are being withdrawn for the personal use is called as the drawings. The amount which is withdrawn by the owner is called as the drawings. Now, he has withdrawn the goods for the personal use. So, goods are lying where in the purchase account? So purchase account is involved and the Ajit's drawing account is involved. Purchase account is involved and the Ajit's drawing account is involved. Ajit's drawing account is the receiver. So Ajit's drawing account debit and the goods are going out. Real account rule says credit what goes out. Ajit's drawing account to purchases. Then the next entry is a slight modification in it. Withdrawn cash from business for personal use rupees 2000. Cash is being withdrawn for personal use rupees 2000. Now instead in the first entry we have withdrawn the goods. Now instead of goods cash is going out. Again the same, Ajit's drawing account debit to cash. Any doubt till 11th entry to anyone? Any doubt to anyone till 11th entry? Okay. Let's come to the 12th one. Paid telephone charges rupees 1000. Now telephone charges is a expense and you must have paid it by cash. So nominal account and the real account. Nominal account rule says debit all expenses. So telephone expense debit to cash. Credit what goes out to cash. Next entry, cash paid to Amrit in full settlement rupees 4900. Cash paid to Amrit in full settlement rupees 4900. Amrit is a person from whom you have made the purchases for 10,000. And now you have on December 14 you made the purchase for 10,000. On December 15 you made the purchase return of 5,000. 5,000 is left. So out of 5,000 you were supposed to pay 5,000 but you have paid only 4,900. So supposed to pay 5,000, paid only 4,900. 100 is a gain for you. So you have made the cash payment to Amrit. Amrit is the receiver. Amrit debit to cash to discount. Amrit debit 5,000 to cash 4,900 to discount 100. Clear with everyone? Amrit was a person, if you see the entry number 7 and 8. Entry number 7 and 8. In 7 you purchased 10,000 and in 8 you returned 5,000. So you are supposed to pay 5,000 to Amrit, right? But you said I will pay only 4,900 in full settlement. So 100 you have not paid. This is paid to Arvind. This is the cash payment you have made and this is the gain you are having. So now I have paid it to debit the receiver. Arvind is the receiver. So Arvind debit to 4,900 I have paid the cash to cash 4,900. This is 5. I will write 50, 49 and this is the gain for me. Credit all gains and incomes to discount. This is discount received 1 and this earlier was discount allowed. Yes, we will have two accounts only. We need to have mandatorily two accounts. Is it clear now? Let's come to the 14th entry. Paid for stationery 200, rent 500 and salaries to staff 2000. All the expenses, stationery debit, rent debit, salaries to staff debit to cash. All the expenses debit and the payment by way of cash. Goods distributed by way of free samples rupees 1000. Goods distributed by way of free samples. It is free. Is any monetary transaction involved here? Is any monetary transaction involved here? Do we need to make an entry? They say it is free. Monetary transaction is involved. Yes, we have actually distributed the free, but the monetary cost is involved as the goods are not free of cost. So the goods are going out from purchases, right? And this free samples can be treated as the advertisement expense, marketing expense, whatever you feel is best describe it. So advertisement expense debit to purchases because goods are lying in the purchase account. So this is how we capture the transactions. We record the transactions. Just go through this question once. Go through the solution for 15 entries once. Ask any doubt if you have. Go through this question once, please. We have done with the first function of accounting, recording. Does the debtor be attributed always to what goes out? Does the debtor be attributed always to what goes out? I am not able to understand. Debtor be attributed always to what goes out? Whatever is attributed as per the rules. We will not attribute it something on our sixth sense. As far as the classification of the accounts concerned, personal accounts are related to the persons. These persons may be natural persons, or these persons may be the artificial persons, or maybe the representative of persons. Real accounts are the rules related to the assets. Nominal accounts are related to the expenses, losses, incomes and gains. Clear now? Representative accounts, okay? You are having three partners. Ajit's capital account, Ajay's capital account, Aman's capital account. Instead of it, I can write partner's capital account. Partner's capital account becomes the representative of the three partners account. Is that right? Clear with everyone? Clear. Nominal accounts are the accounts which are related to the expenses, losses, gains and income of the business. Intangible accounts, copyrights, patents, goodwill, IPRs, these are all intangible. They're all intangible. All the journal entries are clear. Yes, bank account will always be an artificial personal account only. If you spend money to get an ISO certification, see, real account is related to the assets. So an intangible asset is a real account. If ISO certification is treated as the asset, or if it is treated as the expense, if it is an expense, it is a nominal account. If it is an asset, it would be a real account. When it is treated as a fixed asset, then it should have a life of more than 12 months. So it depends how is it treated in the business. Generally, ISO certification cost is treated as the expense. ISO certification cost is treated as the expense. I think this certification needs to be done every year. ISO audit takes place and then the certificate is renewed every year. Patent is an asset. Yes, it is a real account. If ISO certificate is for a number of years, you see, and you incur a heavy expenditure on it, it should be an asset. Then it should be asset, intangible asset. Example of a natural personal account. Vineet's account, Shweta's account, Naveen account. You will not find ISO certification cost in any of the balance sheet as the asset. Is it Naveen what you mean to say? That ISO certification cost does not exist in the balance sheet as the asset. Yes, it is true. Reason being, there is one convention of materiality, and ISO certification expense is not a material enough expense that we should carry it as the asset. Even if we have it gives us a benefit for a number of years, but the amount is so small that we write it off in a same year. Let's come to chapter 5, illustration 5.2. Chapter 5, illustration 5.2. If you need to repeat an expense, Shweta, it's your expense every year. What are the two thoughts about that? What you cannot sell? Why you cannot sell? You don't buy a fixed asset for the intention of selling it, but you are free to sell that. Nobody stops you from selling your building or selling your table. But when you bought it, you don't have the intention of selling it. Illustration 5.2, chapter number 5. Just go through this illustration. This is a very small question. You should be able to form the journal entries for it. That's your expense, Kiran. Just go through this question. Are all the parts clear? Are all the parts clear? Purchase account deals with the goods with which you want to sell. That is the goods in which you are dealing, which is your main line of business. No, you need to do only journal entries. So you cannot, but furniture you didn't purchase for the purpose of reselling it, you purchased it for the keeping it in your business. Any problem with any of the part?